What's going on, everyone? Welcome back. And in today's breakdown, we're going to dive into the concept of discount and premium pricing, which is a crucial part of understanding where smart money positions itself within the market. Now, before we get into it, I'm going to assume you already have a solid grasp on buy side and sell side liquidity. If not, I highly recommend watching my previous video on that topic first. I'll leave it linked in the top right so you can circle back to it. Now, in order to apply discount and premium properly, we need to first establish a range. This is where most traders get confused, but it's actually quite simple once you know what to look for. I usually start by identifying a clear swing high and a clear swing low, essentially the most obvious points where price has reacted. Once those are marked, I'll bring in a Fibonacci tool or any equivalent measuring tool and pull it from the high down to the low. This allows us to locate our equilibrium, which is represented by the 50% level or the zero point 0.5 zone in the fib. That midpoint acts as the fair value of the range. Anything above that midpoint is considered premium pricing, meaning price is relatively expensive, and anything below that is considered discounted pricing, where price is considered cheap. To make it easier to visualize, I like to extend the range horizontally so we can clearly see how price behaves within those zones. But here's something important most beginners overlook. The market isn't operating in just one range. There are multiple ranges nested inside one another. For example, you might have a large macro range on the higher time frame, but within that, price may create a smaller micro ranges every time it forms a new swing high or a new swing low. This is where things can get messy if you don't know which range applies to your trade idea. So I'll walk you through a few real examples shortly. But before that, let me explain why we even bother identifying discount and premium zones. The answer to that is simple: risk to reward optimization. Let's say you take a long entry right at the midpoint of the range with your stop loss below the low and your target at the high. That's basically a one-to-one setup. However, if you wait for price to dip deeper into the discounted area before entering, your stop remains the same, but your potential reward increases significantly, giving you a much more favorable risk to reward ratio. The same logic applies to a short position. The deeper you enter into premium pricing, the better the risk to reward becomes. So, to keep it simple, if you want to go long, I'm hunting for PD arrays or technical setups inside discounted pricing. And if I'm looking to go short, I want my confirmations to appear within premium pricing. Now that we've laid the groundwork, let's apply this to real market example. Okay, so now let's take a look at a few examples of some discount and premium in live market conditions. So when it comes to premium and discount, we need to find a clear, visible range, meaning we need to find either a swing high or a swing low. So as you see right here, we have a clear swing high. So now we will mark this from the wick of the bottom all the way to the top of the high. As you see, we have premium up here and we have discount down here. So if we're looking for buy opportunities, or we're looking to take long positions, we need to buy price at a discount, meaning we need to find a PD array or we need to find a entry confirmation within this zone. So if you were to take a closer look, we will find a PD array or a fair value gap within the discounted area. And as price continues to go along, you'll see price returns back to this fair value gap inside of discounted area to then continue the trend upwards. So as you see, price made it a swing high. And within that swing high, we had premium and we had a discount. And in order to find a good buying position, we need to find a good entry within the discounted area. And we had a fair value gap formed within the discounted area, meaning we could have looked for long positions within the discounted area to continue the move upwards. All right, so let's take a look at a next example. As you see here, we have a clear range right here. As you see here, price made a clear low here and has a high right here. So we need to grab our Gann box and mark out our ranges from the low to the high. And as you see, if we're looking to take out a long, or if we're looking for long setups, we need to be able to find a PD array or an entry confirmation within the discounted area. So as you see here, we have a PD array or a fair value gap within the discounted area. Now let's see how price comes back into that area and reacts. And as you see, price went back into the discounted area, wicked into the fair value gap, and continue upwards. Now, what about this range? This is also considered a range. Why? Because price made a next low here and continued trend upwards, making this a next low and a high here. So let's grab the Gann box and mark out our range. And as price goes, we continue to extend the range. Furthermore, we still extend the range. And if you were to take a look, we have a PD array within the discounted area, making this a valid fair value gap to take an entry with. And as you see, price returns back into this fair value gap and into the discounted area. But as it returns, it makes another range. It makes a range here, making a next range. So what do we have on this range? As you see, we have premium above here and discount. Price made a range. And if we're intending to look for short positions, we can look for a PD array within the premium area of the range. So as you see, we have a fair value gap within premium area of the range. And let's see how price reacts and plays out within this range. As you see, price taps into the fair value gap and into the discounted area of this range here. And it continues upwards and into the premium area of this range, tapping into the fair value gap too, to continue downwards. And that's going to wrap up today's lesson on discount and premium. Hopefully, you have a much more clearer understanding of how these zones can help you identify high probability entries and manage your risk more effectively. If you found value within this breakdown, make sure to hit that like button, subscribe, and turn on notifications so you don't miss the next upload. This is the Trading District, helping you trade smarter, not harder, and I'll see you in the next one.